Stocks and equity markets might be euphoric, but these couple of commodities are showing that trouble might be on the way. Let's dive right in. Hello everyone and welcome. My name is Tim, trader at the Camp Compound, and it's time for our technical analysis video. So let's get right to it. We have in front of us the S&P 500 on the daily chart. Yesterday was a good day as Jerome Powell decided to only give us 0.25% increase in rate hikes, and we can see that right here. So the S&P 500 is breaking through its resistance right here and might rally all the way up to that 430. This is the SPY, and we kind of see a similar thing with the Nasdaq breaking through this trend line right here, which is part of a bearish pattern. So we have to confirm tomorrow to make sure that it is actually broken and that we don't immediately crash back. Very important stuff. So if that is the case, then we can break this one off this pattern, and we might see a move to 333. We see this in, for instance, Tesla as well, which is consolidating just a little bit. You can't really call this a proper bear flag, because there's only 2 days of actual consolidation. We need at least 5 to 7. 7 would be preferable, and anything above that would be, maturing the pattern, which is great. We see that Tesla is, however, getting ready, or is tapping this line for the third time, meaning that we could try again to go higher and tap that 208 to 210, but that is a very strong level, meaning that this is definitely a good area to add to our short, which we already did. Because when the market is this euphoric after such a strong bear market, and like we'll say in a minute, so keep hanging. There are a couple of commodities that are showing a worse time ahead. Let's get to that right now. So here we have natural gas, for instance, and if we look here, then since September it kind of peaked out, and now it is on the move down back to kind of that 2021 point, really before the war broke out. This is of course an important level, as you can see right here. Let's here. 1, 2, 3. It's been tapped 4 times already, and this would be tapped 5. Of course, there was a lot of time in between, so it kind of resets the counter, but there is a decent chance for this to bounce back up. The only other thing that I see that could be interesting is that the ECB is still hiking harder than the Federal Reserve for the moment, meaning that the dollar could lose some steam and some power. But on the other hand, we also see here that oil is kind of coming back to $80 a barrel, crude oil that is, which is decent. That would be traditionally expensive for a barrel of crude oil, but we do see this price compression right here, meaning that this move downwards might just be continued further, possibly back towards that 60 to 70 dollars. There we go, a barrel. We will have to see if we can actually break through this here on the third tap, like we can see here. Tap 1, tap 2, and then this will give us about a 50% chance of breaking through to the downside and hitting that 70 to 67 approximately dollars per barrel. However, what we have to ask ourselves is if the commodity players are so bearish on commodities that are necessary for the economy, and see that while China is reopening, why is that? Why are they so bearish, and what are they seeing that the equities here, the Teslas and the Carvanas, are not seeing? And should we be worried? Here we do see that Amazon, for instance, is probably expected to have a decent earnings and is absolutely skyrocketing. So what are the commodity players seeing that we are not, and what can we do about that? So especially in these kind of rallies, it is important to remember that that this euphoria is more likely to be a trend ender signal than a trend continuation signal. We can kind of see that in Bitcoin as well. I think in this case Bitcoin is a better gauge for liquidity, because here we see, if we quickly pass over that, here's a very clear point that it tried to make a new high but is not really working out and could definitely fall back down, maybe as a bit of a pre-warning towards traditional equities. Hopefully that was useful to you. Hopefully you have a bit of an idea of how to play the stock market and to kind of get prepared for what might be in the pipeline. Thank you so much for watching. As always, keep calm, keep cool, keep compounding, and I'll see you in the next one. Bye bye.